Stephen Burke, off to you. I don't know if this is 82 or 84 or where we are in a row. Enlighten us again.
Thanks, Mark. So as Mark mentioned, ARS is hosting a call today, 12 o'clock, entitled "Are Investors Using an Old Economy Playbook for a New Economy World?" And I think the labor market's another area where we're seeing a new economy world. And a phrase that's been coined during this period was the Great Resignation, which is really addressing how people are quitting their jobs in record numbers. And this is a total non-farm payroll quit rate. So as a percentage of total labor force, it's now up over 2.8% of the total labor force has quit. So this is an area that's going to get a lot of attention and is getting increased attention now. And it's something that corporate executives, whether you're public or private, really need to be thinking about what's going on, what are the dynamics of the labor market, and what's creating some of these changes. So the phrase was originally coined by a Texas A&M professor named Anthony Klotz, who's an organizational psychologist. And his view when he came out with this was he looked back at what happened from the start of the pandemic to the earlier part of this year and saw that people weren't quitting at the same rate because they were happy to have jobs when people were getting laid off at the rates they were. So like much of the demand pulled forward, we think you're seeing a similar kind of concept here with quit rates where they weren't quitting during the early stages and now they are quitting. So that's one element. The other is that people, particularly in the front lines, the essential workers, really started to experience burnout from what they were going through. So that was another element, but I'm going to get into specifically what I think are a lot of the issues. But what Klotz came away with was the pandemic led people the way they change the way they think about life, work, and what they want out of both. And that when you have an existential crisis in business, you create an existential crisis for workers. And a lot of industries were, in fact, faced with existential crises. So when you go through those periods, you rethink what matters most. And we think that's one of the forces that's led people to quit. But just to put it into perspective, the numbers are really pretty staggering. We have roughly about 169 million people in the labor force. 4.3 million quit their jobs in August. That's 2.9% of the force. He called it pandemic epiphanies, or the rethinking of life being at the root of this. But I think there are other factors, and we'll touch on them, because when you get into the demographics of who's quitting and how that's changing and some of the reasons for quitting, it becomes quite interesting. There's also been studies from UC Berkeley about when you have periods that are economic calamities, they leave a long-term impression and stigma for a lot of people. So you saw that with hyperinflation in Germany. People who are children of the stock market crash were less likely, or even adults during that period were less likely to invest in equities. It took to really the 50s and 60s, another generation for people to really get comfortable fully investing in equities again. And then you saw the changes that occurred with the unemployment spike in 08 and then again in 2020. So what they're projecting is that the impacts of this will last much longer than the health crisis that created a lot of the current problems that we're in. So why are they resigning? Government benefits were pretty generous, so that's part of it. And I'll show you where that is coming into play. But I think it was people were starting to go back to work before then. Higher wages is absolutely one of the issues. People are leaving for higher wages, but that's not the only reason they're leaving. You're starting to see unions and others pushing for strikes. So you will see wages coming up again. But that's going to push companies to behave, I think, where they're going to substitute capital for labor. But family-related issues with the school closings, companies closing, daycare being a problem, that was a major issue why people resigned. Companies moving to different locations and people changing locations with work from home, absolutely. But health concerns were a big issue. But a big issue, and I think this is one that business leaders need to focus on more, is how did their company handle the pandemic? And do you work for a company that that based on that is the company's values and your values aligned? And I think that was a big issue that came out. Mark Cuban, who says a lot of things and weighs in on a lot of topics, actually said something on this topic I think is 100% right, that the way management handled their company during this period will define their culture for decades. And that's going to be a hard thing for some companies who are forcing people in or putting people in unsafe conditions, or they felt like they were being forced to do things that were unsafe for them. I think that's going to lag for a lot of companies for a long time. And I think it's going to impact leadership's ability to move the needle going forward for many of these. But I mentioned initial claims and government benefits, and this shows a drop. Obviously, what you can see from 17 forward, very stable with initial claims about 220,000 people. We're now around 330,000, but look how high we spiked and where it's come back down to. So what I would point out is what you're seeing in the last couple periods here, where you can see the last month or two, where the elimination of government benefits or the fear of eliminating government benefits actually changed the initial claims characteristics. So moving back towards a more normal environment there. Which industries were hurt most? Well, clearly the ones that were requiring frontline, a lot of contact. So accommodation, food services, retail, trade, professional and business services. These are all areas, but when you go into it a little bit more, what was interesting is the tech industry had comparatively higher quit rates, which you wouldn't think, but it's actually the opposite of all these industries where people want to get away from these industries in a lot of ways. In the other industries, tech in particular, they were really looking to just move to places that were either more aligned with their culture or more cutting edge for where they think the world's going. But I think this is an interesting dynamic. And you can see this play out just looking at retail, trade, and the accommodation and food services. Look at the spike in the last couple months of how much those quit rates have moved well above historical averages. And I took it back to 2002 here. And you'd see similar things. But when we step back, we have made tremendous progress since the crisis. And it just shows you the dramatic change in unemployment from just shy of 24 million people back down to below 8 million people in a very short period of time. So really significant change. But this has created a lot of distortions and a lot of dissatisfaction in the labor force. So that's going to lead to, with all these job openings, having people really chasing after different opportunities. And you can see they're already starting to see this change. And we think you'll see a continuation of this, job openings come down and job changing remaining high, which creates a really interesting environment. So while it looks negative and we have had this big change, I think it's more a reflection of the changing character of the expectations of the labor force, what they want from companies, what companies need to give them, and how you provide. And I'll give you a little example. Our company, our lease is up next summer, and we had to go start looking at alternative spaces. And we went to a building that's a block or two away, and they were showing us all their amenities. And none of them were really all that. A juice bar doesn't mean much for me, or a yoga mat didn't mean much. But I was with one of our new hires and another associate, and they were wild about the amenities that the buildings are putting out. And they view that as part of the culture and what we need to, think about differently. And it was an eye opener for me that, juice bar in a building when we're in the middle of Manhattan was going to make a big difference for people. But I think the expectations of the young people and new hires are going to be very different. The other thing I'd point out is who's resigning and what the demographics look like are on that is really interesting, because the 20 to 25-year-old segment and the 60 to 70-year-old segment were quitting at a lower rate than they had in the pre-pandemic period, which means that they were in both cases, I think, thankful to get jobs and appreciative of the opportunities to get started on their careers for the young people, and for the older ones in the 60 to 70 demographic, happy to be able to stay in a job because it's too hard to look for one at that point, is the view of a lot of people. The other thing this is all from a Harvard business study that just came out. The other areas that had slight changes were the 25 to 30 were up slightly and the 45 plus. The biggest difference in quit rates was actually the 30 to 45 age group, where people felt that this was their last chance in a lot of cases to make the big career change or make the big changes they were going to make, or they were stuck in jobs that they didn't really have the motivation to make the change prior and conditions got worse. So I think we're in a very unusual environment for the labor force, but I'll also share that we did 2 job postings about a month ago. We got over 300 candidates for each job in the first week and shut the posting down because we had so many candidates. If we left it open, I'm not sure how many more we would have had to sort through. So I think there is an interesting dynamic at play here. I think what occurred is a natural function coming out of a economic tragedy like we've had over the last years. But I do think what companies should take away from this is, and business leaders, public or private, is what are you going to do differently going forward to make your firm the place and the culture that the people really want? And we talk about culture a lot in companies, and oftentimes it's lip service, but I think companies are going to be forced to give a lot more thought and a lot more effort into how they're treating their people going forward, regardless of what you believe about what's going on in Washington, D.C. I think that the issue is going to be the successful companies are going to be the ones that find a way to permeate a culture that's going to be enduring coming out of this. And I think things have to change. So I'll stop there, Mark, and turn it back to you.
Thanks, Stephen. So any comments, questions on what Stephen raised?
Yes, Stephen, hello.
Adam, how are you?
So what you're really saying is that these are generational changes that we're seeing, right?
Yeah, absolutely. And different age groups are viewing this very differently. It's interesting. I think the 20 to 25-year-olds, the reason they're not jumping is because they want the mentorship and the guidance and the socialization that they could get that you can't get at home in a pandemic. And they also wanted the mentorship that comes with just sitting next to somebody as you're learning your job. And so that's that. There's explanations for the different groups, but yeah, you'll see this impacts last for decades.
Are we seeing this also in Europe?
Yeah, actually, there were some numbers I saw from a survey that was shown in the UK and Ireland, where they were seeing quit rates at about over the next 6 months were projected to be at 38%. The US was slightly higher at 40% from a survey that was done here. So yeah, there are similar dynamics. I don't know about the demographic issues, but definitely the quit rates and the dissatisfaction is at really high levels. And I think when you had such a health scare, people are really thinking about what matters. And I think this is what created a whole new way of thinking about work and how it fits in your life and the balance between the two. So I think it will be with us for a while.
And is that forcing? I'm assuming that's forcing wages up as well.
Yes, but there's a yes, but on that. And the but is that companies are going to, as wages go up, if the wage rate is growing the wage bill, which is the total amount of compensation costs for the company, they will substitute capital for labor and automate. So I think that is part of the dilemma too, is if you go into certain areas, and Yvonne was talking about truck drivers. One of the problems in getting new truck drivers is they're all afraid of starting a career where you know that automated driving is going to replace you. So that's the other thing. There are some existential job issues relating to job specific functions that are changing the dynamics too. And people can see the writing on the wall. If your company brings in robots to do certain parts of your job, if somebody else's job, what's going to stop them from doing that to certain parts of your job? And then how many people do you need and when all's said and done? So I think those issues are all at play.
Thank you, Stephen.
Other comments, questions?
Yeah, quick question. What do you think it means for, I'll call it the overall savings rate, and trends? Because there's definitely, as people think about a shift to a more gig economy, they're going to be more protective on that front. And then, the other flip side of that coin is, what are the investment theses that spin off of these shifts that you're following?
Yeah, I'll answer the second part first, which is, tech spending is going to continue to go up. Companies are going to be forced either through having to pay higher wages or through the need for greater efficiencies to do some of these functions. There's also, functions that people just don't want to do those jobs anymore. They're not the jobs that people want to do. So I think you're going to have to find investments to substitute for a lot of these. And I think that's going to take hold. I think another element, you're seeing this, and it was announced in a city in California today, where they're going to start doing guaranteed minimum income for 5,000 of their residents, where they're going to pay them $500 a month, so that they would, maybe it's Chicago that happened, where they're going to start to provide them $500 a month so they can meet their needs, and that's mainly around food. So I think you're going to see more of a push or more testing of guaranteed income programs as well. But I think it's going to also require companies to make bigger investments in training and really rethink their culture. So I think those are all elements that are going to come into play, and mentorship. And then as it relates to the gig economy, I think it's going to depend on what Washington, D.C. does, because a lot of the benefits and a lot of the socialization that people want out of their jobs, I don't know that you always get in a gig economy job. So I think it really just depends on how that evolves as well.
So Stephen, you've got quits going up, but we've got initial claims sort of coming down / leveling off. So that implies that they're going somewhere.
Well, we're also creating, we have 11 million job openings, or 10.7 job openings. So they're finding new opportunities, and we're creating new roles.
Yeah.
And look at all the new stuff you guys are, supporting with venture investments. Those are all going to require, completely new industries developing in some cases.
Right. So it also begs kind of an interesting question, because I know in this community, we've talked like a ton about retraining and things like that. Is this perhaps an indication that people are just, jumping and not needing that retraining, but able to take the skills? And that's probably kind of like, demographics, where is it all happening, dependent as well.
What's interesting is the quit rates for tech would say, since they're getting a higher quit rate, means that their ability to move is higher there. So it's not just, doesn't seem like it's always a skills issue for a lot of, and I think it depends on the job level that's going to matter more. I think it's I think when you go back to the unemployment by education, it's really the lesser educated are going to have a harder time, obviously, and they're going to make it more difficult for transition. But in tech, for example, where you would think you need a much higher level of skill, there's plenty of talent there that's chasing those jobs because they're quitting at a high rate. So they don't feel like skills are holding them back. So I think there's interesting dynamics by industry on that, Bill.
Right. Yeah. If my eldest son is any example, tech is like crazy in terms of demand and what they're willing to pay up, for people who they think are qualified.
And as we've seen, Bill, they are also among the more vocal about company culture and what they're willing to accept from their company. And I think that's changing their dynamics there as well.
Right. Foosball or ping pong?
Ping pong.
Or both.
Football.
All right, we'll play both. Denise, I've seen your comments. Can you must have insights here. I'm also wondering how many people are really full-time on one gig, at least in people in 30s, 40s, 50s.
Yeah, this is my jam, this whole conversation right here. This is what I live and breathe. So Stephen, sorry for spam messaging there. I couldn't bite my tongue.
No, go right ahead.
You know, that shift towards freelancing, I think like Upwork right now, they're quoting there's like 60 million freelancers, but that vast majority of those people are actually side gigs. But there's actually in reality 15 million independent professionals that are choosing freelancing as a career and a profession. So that number realistically is much lower than is globally quoted, but it is actually rapidly growing. And that's what we talk about in terms of the open talent economy, which is a shift away from companies hiring all of their employees to a much lower hired number, and then leaving that bandwidth open for bringing in specialized talent on projects that are needed to be really agile and nimble. And there's a massive movement in that region, moving towards that kind of modeling. And there are a lot of companies out there that are doing it. But ultimately, if it was a baseball game, I think that whole movement towards freelancer as a legitimate kind of go-to model is probably in its first inning. So it's early, but there's a huge amount of interest in there. And I think oftentimes a lot of people that are dropping out of the employment model are doing so because they're becoming freelancers or they're starting their own businesses, because it allows that freedom and autonomy that people got a taste of over the last year and a half that they're unwilling to give up.
Are we tracking that effectively? You came up with a 15 million person count. Who's tracking this well?
There is a report that just came out by this gentleman called John Younger. He runs a company, a consultancy called Agile Consulting. He just concluded a 3-month study, including 100 platforms globally, and surveyed 1,900 people around the world on their sentiment and their actions in the freelance economy. And that's where all of this data comes from.
See, Michael Fields also just put something in the chat about McKinsey.
Denise and Stephen, these the freelancers, are they captured in the statistics of startup businesses with the boom in new businesses being started? Is that where that's captured? Where is it captured at all?
I'm not sure is the answer. I don't know, Denise,
Yeah. Oh, I know that the typical employment numbers that we tend to track to indicate the health of the economy is definitely not inclusive of these new ways of working. And I think at some point that we modernize. So we have to look at that with kind of a pinch of salt. But in terms of if they're not incorporated as a business, so if I'm going to incorporate as an LLC, then that would be included in a new business stat. But a lot of freelancers are operating on a 1099 basis, working globally. So they wouldn't have the necessity to create an LLC. They would also not be captured in that number. So I think that the metrics for tracking this analytically is also developing, but it's not yet there.
Thank you.
Denise, how do you think about the future innings? So this trend to freelance. I mean, one of the things that pops up in my mind is we need to do healthcare differently, right? Because there's a lot of healthcare that goes around the corporate model, and that's a very, very big topic too. And how do you think about that challenge, and what are some of the other challenges that maybe we haven't come up with?
Well, those are a lot of verticals that need a huge amount of disruption and need a lot of innovation in the work model. But if you go back to, a lot of people look at freelancing, you think of the Ubers of the world or DoorDash, and that for me is the ultimate kind of personification of gig. But real freelancers, as we talk about those 15 million that are looking at this as a career, looking forward, if picking up a gig on Uber is kindergarten, the real kind of college education is what we call open talent. And in an open talent world, which is organizing as we speak, there are 3 stakeholders. The first stakeholder is the company that has the demand. So those are the ones that have a problem to be solved, job to be worked on. The second stakeholder in that relationship are these platforms. So they're the platforms that connect talent and opportunity and basically sell trust. And the third group of stakeholders are the freelancers themselves, which are independent professionals, either operating independently or operating in cohorts to bring greater volume and scale to companies and projects. So that's where it looks like we are going. And there's some groups that I follow and involve in. One is called Open Assembly. They're a team based out of Harvard, and they have a really wide, deeply entrenched network of really smart people whose mission is to move 1 billion people to the open talent economy by 2025. 1 billion people is a third of the global working population. That's a very significant goal, and I actually wouldn't doubt that they're going to get there. So to achieve that, they're developing a consultancy model to train companies at scale how to effectively work with this massive freelancer population. And conversely, they're also coming up with a credentialing system for platforms, because right now there could be 100 platforms that operate differently. So they're coming up with a standardized way to grade platforms in terms of best practices, so we can also mature that model. What they're not doing actually is paying attention to the massive amount of freelancers or people that were previously employed that are moving towards freelance. They're not paying attention to that part. So that's ultimately the construct of the open talent economy, which it looks like we are all moving towards.
But Denise, maybe you could address more explicitly healthcare. That's such an important factor for people where they anchor. They can anchor with side gigs too, but how do you see that playing out?
I don't actually have any valid information to offer on that particular vertical, but I can definitely look into it, and if I find anything, bring it back.
Talk to Jim Hawk about that. We're trying to solve for that.
Okay.
In fits and starts.
Yeah, I think one of the answers at least is professional employee organizations. It's a different model where, basically using the law of large numbers. But I totally echo Denise's comments. It's ripe for disruption.
Comments, questions?
The other point is, I mean, this when I contrast this, what Stephen said, what Denise said, and the comments that have been added by the group, this is miles and miles away what's happening with other countries. Maybe some of this stuff, maybe some of this is going on in Europe, but it's clearly not the model in Asia, not the model in Latin America. Where does this put us eventually in terms of competitiveness? I mean, it sounds good. It sounds like there's a lot of pros, and I think it's being spun that way. What are the cons here?
Well, I'll start with one. I think Joe Manchin was at the Economics Club in Washington, D.C. this morning, and when he was asked about the programs that are being proposed and why he's so against all the $3.5 trillion of spending, he brought up a great point, which is we have two big programs that are scheduled to be significantly underfunded by the end of the decade, which would be Social Security and Medicare. And we want to add all these other programs on top of that when we already have two programs that people are going to be relying on that are unaffordable for our nation. So it does put us in a pretty tough spot, Greg, until we figure that out. And I think that's one of the big issues is how do you pay for all this stuff if the government's going to be the one that people are relying on to do it? And I think that's going to be a challenge.
Yeah, thanks.
Well, we were talking about having a future of work next event, Denise. Maybe you could bring on some of those people that are doing the tracking, writing those reports, that 3-month study that you just mentioned.
Yeah, I'm sure they would love to come in and speak about that. And there's also just a huge amount of money going into future of work in terms of these technologies and platforms that are connecting people and allowing them to collaborate seamlessly. And it also goes back as much to Stephen's point about culture. I think this is all one huge cultural move for sure. And I'm Stephen, I was glad you raised that, because even in our own work and the partners we work with, it's all about culture. And I think that even the large big tech companies that may have the best flexible work policies or hybrid work policies are having a really hard time keeping butts in seats because they're culturally misaligned. And I think that people are trading dollars for culture at this point. I think that the experiment of the last year and a half is like a huge social human experiment, and people look at things differently.
Yeah.
I do think the contract between employers and companies, particularly the largest ones, has changed forever with the pandemic. And I think that's going to be something that's going to be really interesting to see play out. But I think every company, public, private, big or small, really is going to have to step back because the wants and needs of the new people coming into the workforce is so different than anything we've grown up with. So, and Bill, you're right, it is Stockton that is doing that program. Thank you.
Mark, if I can just add, hi, it's Richard de Villiers from UBS. Hope everyone is well. It's important as well to keep in mind that labor market data is usually a lagging indicator. So people shouldn't be too overly discouraged by the shortfalls in payrolls. What is interesting and what I think is going to be important is that it's difficult to predict what the level of payrolls will be going forward, including this massive trend about people quitting their jobs. to start their own businesses. That will make it very tricky for the Fed to determine when their mandate on maximum employment has been fulfilled, which will be a signal for them to start raising rates. So I think rather than just focusing on payrolls, we expect the Fed to look at a more broad range of labor market indicators going forward. So just a note and just a comment on my side.
And
Okay. Sure. Yes, Yvonne.
And as somebody who's been an independent contractor for many, many years, I could guarantee you many of these people will go back to their full-time jobs or will find a new time jobs. And I think this is just a short-term trend because also there have been a lot of people haven't spent as much money every day to live in wherever they were living, and they were getting their paychecks and they have their savings.
Simon's Law Office, Michael speaking.
Michael, I'm going to mute you.
Hey, good morning, Jim.
Trying to mute him. There we go. Yeah. Mark's Law Office. Okay.
Mark, there was a comment from Joe Chan on is in California bankrupt. And what's interesting is what the cities are doing is taking some of the federal aid that they were given from the pandemic and using that as the funding vehicle for the guaranteed income.